May profits be upon you. Happy Saturday. Hey, let's check out the currency futures, the individual currency futures, so we can actually see who is really strong, where the momentum is in each individual currency, so that we can put the strongest against the weakest, which will give us the best chance of taking successful trades, right? Let's start with the DXY. DXY is again the king of currencies right now, the strongest, number one. There is no question about that, with the Fed raking these, hiking the rates, 75 basis points a few times in a row, right? And that's just making the US dollar just make a parabolic kind of move, man. Look at this candle. This is the daily. This is a daily candle. That's crazy. Let's go to the weekly. All right, you can see the entire week didn't even leave a wick. It did just, there's a little baby wick up in there. But for the most part, it's been ripping. Now let's start with the cotton report that was released yesterday. All right, we can see that the major institutions, all right, are 79% long, right? And I pointed this out last week, the week prior, right? And last week, that number reduced to 72% long. Okay. Here's what we want to make note of. They've closed 3,280,000 long positions. They also did the same kind of move, same size move last week. All right. This week, they are adding 4,458 short positions. That's curious to me. They're taking profits in their long positions, and they're adding a bunch of short positions. Very interesting indeed. All right. 3 weeks ago, 16,500 shorts were added. All right. 3,000 closed last week, but those and more were added this week. So it makes me say, first, you should be, we don't have too much, there is no dithering about it. We should be looking for to make strength plays with US dollar. There is no doubt about that. All right. But it's an extended market, yes. And what I want you to notice is we are in a supply zone, and that supply zone starts over here. All right. There is a daily supply, not the strongest of all supplies, and I fear that it will be taken. It will be taken out. You see this area here? I'm looking at that area as a hard structure, as it was broken, as the low was broken there. For me, that once you start trading below these kinds of swing lows, all right, you can expect more declines, right? Here we are in this daily supply, and with another one built a little differently on top of it. All right, and we are in the middle of the zone right now. This is on the weekly time frame, folks. All right, this is a very strong currency, just absolutely strong. So if we go to the daily, we can see that we are in the middle of this zone. So bearing in mind what the cotton report is saying, I think taking more longs should be done with care, because this kind of move has not been corrected yet. And I'm looking here for that kind of correction, just a little near-term correction of the move. All right, clearing up the imbalance there, and then continuing higher into this supply. I believe this supply will not hold, and maybe this one will. So that's what I want you to bear in mind. So I'm looking for any, if you're a swing trader, wait for the pullback, man, because I think that pullback is coming, and we'll see hints of it on the lower time frames. So we can when price does start to recover, this is the correction, and what I'm thinking is the correction, and once it hits here and starts pulling back up, this is the time to go harder anyway on strength plays with the US dollar. Let's move on, shall we? Because I spent a lot of time on that one. The next one is the Aussie dollar. All right, Aussie dollar, you got to be careful with this one. Now, it's pretty much the same thing. Look, on the daily, you can see we broke significant swing structure there, and we are trading below it. It's all bearish. We should be bearish. That's on the daily. Look at the weekly. All right, 1, 2, 3, 4, 5, 6 weeks. All of these candles breaking the low of the previous candle. 6 weeks of bearish movement. All right, look at that parabolic. Excuse me, let me not stop using that word now. That applies to the US dollar. But look how hard price is dropping. And look at all the momentum. Now, what's significant is we are dropping into demand zone here. All right, and I expect some kind of reaction. Okay, and with that reaction, we may have some near-term bullishness come in, only to be into trading into this range. And I believe that we should find price will likely continue down lower, because the Aussie is weak against the US dollar. And on its own, it's just weak by itself. Look, on the COT report, let me unlock that. All right, if we get back to the daily, 67% of the big boys are short. 67%. They were 75% short the week prior. All right, that number is reducing. All right, they're adding long positions, 9,500 of them, right? And they are closing short positions. So I believe they're looking towards a near-term correction. All right, and it would make sense in this context, because after every impulse, you want to see that impulse corrected. Okay, and where would I be looking? Where would you be looking for? Yeah, you don't do that. You don't have to go into all of that. You can just look for price to pull back. All right. This is the individual currency futures. All right. You just look for price to make it a bear flag. Okay. You're just looking for a bear flag to form, and then continuation of the overall bearish trend. All right. If we look at it on the daily, you can see, it's been pretty steady eddy down. And I'm looking for this correction. After this breakout of the swing, you expect price to come back at least to this area here for like a retest, and then we can come back on down. Okay. I didn't mean to go all the way over there. Okay, next one would be the British pound, the weakest of all of the currencies, Why is that locked? I don't know. All right, so the COT report says that 70% of the institutions are short. 70%. That number has reduced since last week, which was at 73%. They're not adding very many long positions, but they are loading up on short positions, 13,000 of them. All right, 13,000 of them. The outlook is really bad for, let's go to the weekly. The outlook is really bad because what did I tell you for the last couple of weeks? That after breaking this point here from 2020, I believe this is during the COVID, the worst part of the COVID crisis, where things got really sad and they rebounded. Well, we're now trading past that. Okay. This is again March 2020. Okay. what I want you to see is we are trading back that, and I believe we're heading towards parity. All right, this target's been there for a couple of weeks now. I believe we're on our way to hitting it. There is no let up in that momentum here. So, folks, look out below. All right, this is one of my definite plays. I'll be shorting against the pound for sure, and I'll be longing against the US dollar. All right, and longing with the US dollar, and this will be one of my the currencies that I'm definitely looking hard at. Okay, let's go to the next one. Hello. Okay, this is the Canadian dollar. The Canadian dollar futures. All right. If we go to, well, we're already at the weekly, so let's just take a look at the weekly. Why is it still locked? All right. So you can see how hard we came into here. Boom. Look at this. 1 week, 2 weeks. Look at the length of these candles each. All right. Breaking that weekly swing low and then come down. All right. Actually, this is like the internal structure, isn't it? One. Look at how hard it took. I mean, it took a minute to start that descent, but once the descent started, it's just beaming down. I do not believe this zone, this demand zone, is going to hold here. I believe we're coming down to here, honestly, and I think this target gets hit this week. Okay, it's pretty weak. Canadian dollar is pretty weak, but let's take a look at the COTS. The COTS says about half of the institutions are long on this, a small majority. All right, they're not adding very many longs, but they are loading up on shorts, 10,000 of them. Okay, I do believe this momentum is going to take us down into this area here. So I have this near-term target here, but I'm also thinking that here is the this target is, we're going to fill in any fair value gap here, and price is going to come down to the 72,120. Okay, so I'll be looking at shorting against the CAD pairs as well. All right, shorting against the CAD currency. All right, let's go to the next one, and that would be the euro. All right, the euro whole just terribly weak, very weak. You see how we broke this higher time frame swing, all right, and then we broke a real hard one here. I mean, look at this. This is from 2016. When you start breaking lows and trading below those kinds of swing lows on your charts, that's a really bad sign for that economy, and it kind of just says recession, and there's some challenges in with the pound and euro that the U.S. is just not seeing, specifically the energy crisis there because of the war, and their inflation is just running out of control because this isn't a supply side, demand side kind of problem like we have here. The supply side issues that we have here in the U.S., where we can attempt to try and fix our economy, handle the inflation by rate hikes. I'm sorry. This is theirs is a little different over there in the euro currency sector and and the pound in the UK. So it's going to be, it's not looking good. It's not looking good, and I'm hoping that things get better sooner before they get worse. But the target that I have is down at 95,771, and we are running into a demand zone here. if I can get to it. All right. Here's this demand, and I'm not sure. I don't have. I was going to say I'm not sure this is going to hold. I'm pretty sure that it won't actually. Uh, I believe this zone will fail and we'll be coming down a little further. Uh, this structure is what this was built on. We broke out, and came back. Retest this high here, this structure, because this is a key level going across. If I can draw it here, this is a key level going across here, not a straight line. Better. All right, and I'm looking for a price to. This isn't very strong. I'm looking for a price to not hold here and crash through. Look at all that momentum in that candle. This is a weekly candle. We take a look at the daily. All right, we can see easy price action. Unfortunately, all right, what am I looking for? I'm looking for a price to give some kind of reaction here, maybe, all right, up to, sorry, up to a just a bear flag. All right, maybe up into this area here. All right, maybe we might find a price might dither a bit and then come back down and continue bearishly. But I'm not ruling out more bearish momentum until we take out this demand. All right, and what I would be looking for is that a pullback, a bear flag, and then price continuing down to hit this target. We are trading below parity. I mean, with momentum, we come away from that parity level. Where did it go? I just had it. I just was looking at it. There you go, right here. We come behind here. You know, it took a minute to get crashed through. Maybe we come back up near it and then continue down with lower lows and lower highs. That's what I'm looking at. So I'm looking to short against the Euro USD. Let's move on to the next pair. Next currency. I'm sorry. And that would be the Japanese yen. Japanese yen, a perennial weak one. It's a very weak currency. However, let's look at the COT report. 77% are short. That number has grown, okay, since last week and the week before. It's been building up more shorts, right? But look what we have here. Last week, they closed 16,679. That's taking profit, people. And that continued this week, closing 4,556 long positions. They're closing long positions. Okay. They are also closing shorts. They almost 4,000 of them. The week prior, they were adding shorts. The week prior, they were adding shorts big time. All right. And they've been adding shorts and shorts and shorts. All right. Now they're starting to take profit. Minus 4,000. All right. They're starting to take profit, and they're starting, you see that price had, is starting to move up. This is signaling that crazy looking candle there, that crazy daily candle is the BOJ, the Bank of Japan, intervening. All right. They want to look to get this stop this crazy devaluation. All right, and they are taking measures to strengthen their US, I mean their currency. So you see, we lost momentum in this bearish in a leg of structure, right? See these rejection wicks here. We're losing momentum. All right, and we come to the middle of this monthly zone. All right, and we have not gotten a close beyond it, and we are still well within the demand zone. I am looking for price to start to come up a little bit. All right, so I'm looking out for it. Maybe we might get a correction here, and price will form a bear flag and maybe continue bearishly. But I am definitely looking in the near term for a response, a reaction here. And if price does give this kind of reaction, and we come up into this area of, I would call this a range of supply. All right. If the price comes up into this range of supply, I do expect price to react there, and we may be able to take advantage. All right, so I'm definitely taking a look at putting this yen against stronger pairs or stronger currencies, because you can see there was a stretch up, and I'm looking for look for this pullback, and then maybe a continuation. We'll see, because this is when you start to look for evidence that price is going to continue down or shift in the market and shift from a bearish momentum to a bullish momentum. This is giving the signs that this is driving me crazy. This is giving the signs that it may be turning around. So I'm definitely looking at price create this bear flag, and we'll see if what this corrective structure, how far it goes. But I'm definitely holding off on shorting against the yen right now. All right, so let's move on to the next one, and that would be the New Zealand dollar. All right, the New Zealand dollar. Let's take a peek at the COT report. I keep locking these things up. I don't understand why I keep doing that. All right, it's 68% short. The banks, the big banks are 68% short, central banks. And last week, that number was 56. This week is 68. All right. They closed 303 long positions, and they only opened up less than 1,000 shorts. All right. They are taking profit. All right. And they're closing. They're closing on their long positions. It looks like they've been adding short positions for weeks, right? You see those numbers. They've been adding short positions. This thing has a lot of momentum to the downside, and I will be taking trades based on that. It's a weak currency. All right. Look at all the candles that are breaking the low of the previous candle before it, just like the Aussie. All right. There's no reason to be looking for longs. No reason at all. All right. We are in a larger demand, but we are pile driving through it. All right. We already hit the target that I had set like last week, and that goes away. The new target is this low. Yeah, I think price is going to head down and hit that. That might happen this week. All right. We are heading towards what I call the extreme of this larger zone of demand. All right, we're a little we have a close past the midpoint of it, which is for me pretty significant. All right, if when price starts to close candle bodies below the middle of a zone, it makes me think that it's likely that that zone will fail with succeed, the next test lower, the next with these mitigations, it's going to eventually fail. All of them do eventually, but this one looks like the intent is to take it out. All right, so I have a target down here, and any pullback, I'll be looking at a correction maybe up to this point. All right, and then we can look at it as a bear flag and consider shorting some more. Just be careful with the shorting, because when markets look like this and it looks like it may be a little extended in one particular direction, like this one is extended to the downside, there's always that that threat of a snapback. All right. And you know, that could happen kind of quick. It could still respect the supply zone, but it may come past where you think it would be stopped or limited, and just by way of a wick. So expect that volatility to come anyway. Just keep your eye out for it. All right, this is going to be a funky week. After when you see moves like this where they're very aggressive, there's the corrections can tend to be pretty aggressive. So that is my parting shot to you, my parting advice to you. Now, this one, the Swiss, this one has been strong, but I don't like this week. Look, the cotton report is at 65% short. All right, not a lot of activity from the big banks. They don't know what to do with this mess. Now, what I'm going to show you is the weekly. Look at the weekly. All right, we had this power move to the downside, right? All right, and then it chops up in correction, a very complex kind of correction, right? Price then pulls down with 3 weeks of bearishness. All right, 3 successive weeks of bearishness. That gets corrected, and then we have last week, we have a candle close and a bearish candle close. What do you get out of this? Neutral. It's neutral. All right, and if you go to the daily, you can see that neutrality, if you would say, if you will. All right, price does break the highs. All right, and then we have this low, but it doesn't convincingly break that demand here. It doesn't, because it doesn't give me a candle body breaking close. All right, it does wick past that low, and some people consider this zone taken out. I do not. Why? Because of the reaction afterwards. Now, what's significant about that reaction? Come on, man. Just get down here. Oh my God. Gosh. All right. What's significant about this reaction is it broke this high here. It broke this high here. All right. That's an indication that price may want to go higher, especially with a candle body breaking close. All right. So I'm looking at price pull back here. All right. And this looks impulsive, just as this looked impulsive, and this looks corrective, right? An impulsive move down could take out this low. I suspect it might, because price didn't make a new high as yet, and that makes this a weak low. So I have my target set lower. All right, and because we have some momentum coming down, I suspect that price will continue to head lower, and we'll see this week get filled, and we're coming into a demand. I'm expecting some kind of reaction here, maybe into the fair value gap there, and then quite possibly a continuation to the downside, because this is the way the Swiss has been moving. The Swiss franc has been moving. It's not like I would expect it just to come on down. All right, look at the way it's been. Just the breaks aren't very strong when it does break. It makes a big move down, and then it makes a broad move up. And now we have another broad move in the opposite direction. Maybe we take this low by a little bit, like the way it was taking the highs by a little bit each time. So I'm definitely looking for more downside. But overall, this has been kind of, these wide moves have been in the same range. All right. And so it kind of leaves things as bearish. So I'm not really high on taking any trades with the Swiss. I'm not. All right. Let it sort itself out. Let a definite and definitive, I like that word, definitive, a definitive bias. Let that happen. All right. Break this low. Then I know we are definitely bearish. All right. Or hold the low. hold it. Let this low hold. Let me see a bullish price action here. And then I'll start to think, okay, I can take buys with the Swiss. But until that happens, this coming back to the middle, this this isn't the one that you want to be putting money on, in my opinion. All right, and I believe that is the last one. Yes, it is. Okay, so to recap, I'm looking at buying the US dollar. I'm looking at with a wary eye. I'm looking at the yen gain some momentum to the upside, so I'll be looking at buys against that with that, and I would only put those two against the very weakest currencies, which would be the pound, the New Zealand dollar, the CAD. Okay, be careful again with the Aussie, because for the reason that I gave, entering in demand zone, a demand zone right now. So watch out for snapbacks. All right, these bearish impulses. A lot of markets are bearish right now. Watch for the snapback. Watch for bearish flags to form. And if you're going to long those near-term pullbacks, be very careful to just look for pristine opportunities, the nice, clean setups. All right. And if you're swing trading this week, make sure you consider using a larger stop loss. All right. Because there was so much volatility last week, you can expect those corrections to be somewhat volatile as well. All right. I will see you in the next video. I'm going to be putting out a lot of analysis this weekend for the upcoming week. This is going to be a tricky week coming up, in my opinion. So again, make sure you're patient. You don't have to trade every day. Just because you're a day trader doesn't mean you have to trade every day. All right. Take the best setups. Stay out of the middle of ranges. I did not take my own advice on Thursday. All right. I got caught up in the middle of some doggone ranges for no good reason. Do not do as I did. All right. Do what I say, not as I do. Okay. But listen, take good advice here. All right. Stay away from the middle of the ranges and stay on the edges of those ranges. Take your shorts from the highs and take your buys from the lows. Okay, if it's price is ranging. Okay, I'll see you in the next video, and I'll put them all on a playlist for the week ahead, and I'll see you. Thank you for watching.